Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Kiwi dollar has fallen sharply and is now at a 10-year low. But first, the Chinese delegation to the seemingly endless revolving trade talks in Washington has declined an invitation to go to a US farm state. That surprised the Americans. That saw Wall Street fall in its final Friday session, ending down 0.5%. And that contrasted with Shanghai, which ended Friday with a 0.3% gain. The Americans are talking tough with the usual presidential bluster, but quietly they've announced more than 400 additional Chinese exports have been excluded from their tariff regime. Those growing exclusion lists are now huge. This is the new game in Washington. Get your Chinese imports on one of these lists, all very crony capitalist. Apple is apparently one winner after support from the president. In China, global banking giant HSBC has launched a public relations offensive aimed at leaders in Beijing, reflecting worries that its position as the biggest foreign bank in China is at risk. This comes as there are calls in China to place it on its unreliable blacklist. And the Chinese central bank has lowered its new reference rate for bank loans by 5 basis points to 4.2%, indicating that monetary conditions remain loose. Meanwhile, China's giant sovereign wealth fund revealed that profits on its international portfolio fell more than 2%, a sharp reversal for this portion, which earned more than 18% gain in 2017. Back in the US, new Fed data shows that household net worth grew only marginally in the June quarter, but at least it grew. It was near its slowest growth in the past 12 quarters. In New York, the Fed has pumped yet another $75 billion into money markets on Friday, taking the total to $275 billion in 4 days. Plus, it's added new capacity to deal with the issue. And it seems these measures have calmed their repo market pressures. In India, they cut their corporate tax rates in an effort to spur investment and boost growth in the country's faltering economy. The base corporate tax rate is to be lowered to 22% from 30%. The US Treasury 10-year yield is lower today at 1.72%, down 4 basis points from where we left it on Friday. Gold is up $18 to $1,517 an ounce. And US oil prices are little changed today, just on $58 a barrel. The Brent benchmark is just over $64 a barrel. And our currency is currently at 62.6 US cents, and the last time it was this low was in June 2009. This represents a 4.5% devaluation from the surprise 50 basis point OCR cut on August the 7th. We are now lower against most others as well, near a 1-year low against the Aussie and the Euro. On a trade-weighted index basis, it's a 4-year low. On those cross rates, we're softer at 92.5 Australian cents. Against the Euro, we're at 56.8 Euro cents. That puts the trade-weighted index back down to 67.9, 100 basis points fall in a week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.